Welcome back, Financial Reboot Show. My name is Samuel Levitz. Guys, yet another huge week in the market. Did you have a huge week in the market? We're going to show you what we did this past week. I'm going to say around 57% last week, blended average. So stay tuned to that. Look, Yellen had a speech, okay, talking about the rate hike. We're going to get into that, what that means to you and your account and your money, more importantly. We got a special guest here in the studio today, someone that has been a client of ours for a while now and wanted to fly into Honolulu to come see us, Hawaii, obviously, to come see us and spend a little bit of time with us, kind of cruising around seeing what we do, because he's been a client for a while and he's going to be in the studio. It's going to be really fun to have him in here, which we haven't really had a live studio guest in a long time, but nonetheless, he's coming in today. We've got big news. We're going to talk about options. We're going to talk about that rate hike, which is really important to you. We're going to talk about gold and why we got out of gold, because it was a beautiful exit out of gold. It was so good. And not only are we out of gold, but we're kind of sliding through the back door in gold, and what we're doing with it right now. You definitely want to pay attention to that, because big things are going to happen with the strategy that we got here, and at least that's what we expect. And just remember, we do this on a regular basis because, you know, our team here at Financial Reboot kind of pays attention to this stuff. When you're sleeping and you're snoring away and your spouse is saying, honey, can you? Our team is up researching all this stuff for you. So pay attention, right? I think we want to say like 57% was our blended average last week alone. Huge, big numbers. We like those. We like those numbers. So let's get right into it. We're going to take a quick break, get the team back in here, and we will see you right after this message. Look, here at Financial Reboot, we are all about value. If we don't give you value, then we're not going to survive in the marketplace. So the point is this: you want to make money in the stock market. We want you to make money in the stock market. We don't get paid unless we make you money in the stock market. It's quite simple. So we realize the importance of value. We realize the importance of trust. We realize the value of being personal with each and every person in our client and consultation services. So you have a unique situation, and we want to give you that specific attention that you need. So listen, the thing to do right now is text the word review to the following text number: 760-254-0003, 760-254-0003. You'll see the number here below on the side. Get your review now. Let us dig into your account, see what's possible for you, and see what it takes to really learn to leverage the funds that you do have into something much, much bigger in the coming months and years in your portfolio. Till then, my name is Samuel Levitz with Financial Reboot. We'll see you soon. Welcome back, Financial Reboot. Now look, as always, this is a segment that everyone seems to really like, because this is where I bring out our smart guy here that runs the investment team at Financial Reboot, Mr. Patrick Comer. Patrick, thank you for joining us.
Thank you.
Now this is going to be a really cool segment, because this is something that not many people do, which is we're going to talk about our losses. Like, you know, we talk about our gains and 20% here and 5% for the week and 300% like we talked about before, which is great. And you guys, over the weeks and weeks that we've been doing these shows and all these past episodes, you know, I think there's a little trepidation out there where people say, well, you know, they might not believe in all this stuff, which I get. I understand that. So we decided to build in our losses as well, so you guys can see full transparency. So what we do is we show losses, we show wins, and we show you that even though we have some losses in there, it keeps doing this, right? That's the whole point. So your portfolio keeps growing. Patrick, let's talk about the losses that we currently have, which are not really losses just yet, but Patrick will explain.
Well, these are unrealized losses, which means we haven't banked them. We're still sitting in the stocks. The first one is TGD, which is Timmins Gold. We've been talking about that for a few weeks. We're still in an accumulation phase with that. It went down to about 46, 47 cents today. It's still a good buy range. We're looking at this more in a long term. We'll talk a little bit more about gold as we go through the show. But right now, gold is struggling. And we think there might be a retrace to about 1250, and we're willing to accumulate the Timmins because gold is still in a long-term bull. So on these dips, we want to accumulate the stocks we like best so we can get them cheap, and then we'll just kind of ride that red number until we cash in.
Yep.
Another one is QHC, which is Quorum Healthcare. That's a spin-off from a larger company. We're willing to sit on this for a little while too, and we'll probably accumulate some more shares. We're down about 12% on it right now, maybe a little bit more today. But this is a spin-off. It's kind of structuring. It's getting its things together. We see big things for this company. So this is a little bit longer term of a play. And then, of course, there's Atosa, which is our biotech play, which had a reverse split this morning, which we expected. We're down about 23% on that right now. We'll look to accumulate a little bit more. Biotechs are still kind of in this up and down phase right now. When a nice strong bull runs into it, we want to own that stock. So we'll get it cheap now.
So just to let everyone know, I mean, a lot of our plays, our R-A-R-E-R, are relatively short term, meaning depending on our client's situation, depending what our clients are looking to achieve, we might put them in a short term play.
Right.
We might put them in a mid-term play. We might put them in a longer term, maybe dividend paying a play, depending on what their investment goals are. This is what we do during your review call, by the way. If you haven't got your review call, do that now. Hopefully it'll be right here on screen. Text the word review to 760-254-0003. Now, like I said, it really depends on what the investor is looking for. Now, a lot of these things that we're talking about losses, now these are not losses yet.
Not yet.
Right? Because these are what we call unrealized losses. And quite honestly, they just haven't done what we're looking for them to do just yet.
Yeah.
And these are why these are a little bit longer plays, maybe a couple weeks, right?
Yeah, we're still in an accumulation phase for them. So unless they do break down really significantly, go below our stop losses, then we'll stay in them. We'll just keep buying them, get them a little bit cheaper, and then when they're ready to flourish, we'll ride that train.
Yeah, and there's a reason why we like to talk about our losses as well, because it shows you that we're human and we're transparent, which we like. We want you to feel comfortable knowing that that our consultation with you is legit and it's real, because we're human. I mean, Pat and the rest of the team are human. He bleeds, believe it or not. So just know that with our wonderful gains and our amazing, 50% in a week and our 57% blended average for this past week, there's losses in there that we haven't taken yet. So we don't really call them losses just yet, because until you sell, you don't know what's happening. You don't know if it's a gain or a loss. So that's why we don't really talk about losses unless it's realized, meaning it's been sold.
And that's why it's important to manage your portfolio, not just buy things and just come back in 6 months and check it. You want to always keep an eye on it, especially in today's market. It's so volatile. One day it goes one way extremely, and then the next day it goes the opposite. So you have to stay on top of your money.
Yep.
It's your money.
Yep. So I hope that makes sense to you, because it's important that we reach out to you and show you that things happen in the marketplace. And while it might not be a realized loss at this point for some of our people, it happens week in, week out. Now, the goal is we have wins, we have a couple losses. We have some wins, we have some losses. The point is this: you always want to have an investment crew that's helping you, right? Or consulting with you, i.e. Financial Reboot, that's doing this on average, right? No one wins every play every time. That's the whole point. As long as you're still climbing that ladder, that's going to make you happy at the end of the day. So what we're going to do is we're going to take a quick break. We're going to pull up the other charts. Hopefully you saw those charts. We're going to pull up the other charts. We're going to go to the other side of the spectrum and show you the wins, which everyone loves to talk about the wins. We're going to fill up on the sweet nectar. We'll be right back after this message, which is going to be us. We'll see you in a second. Okay, welcome back. So we just got done talking about the dreary realization that life sometimes throws you curveballs and lemons. And what do you do when you get lemons? You make lemonade, right? So guys, we talked about unrealized losses. Now let's talk about some of the wins, because this is where you get excited. And I want you to sit up in your chair. I want you to start smiling, because this is where the fun starts. Now, in last show, we talked about a pick, and we'll put it right up here on screen. CARB, C-A-R-B. Let's talk about what CARB has been doing since we last aired our show. Check this out.
It's up about 8% right now. It's actually moving. It's even acting a little stronger than that. Probably by the end of this day, it'll be up even more. But CARB is something that we recommended that you buy for a core portfolio hold. It's cloud-based software, very hot sector, very important sector. And this is really, really one of the best plays out there. It's already got a bid for the stock for the company at $15 a share. It's trading, it almost got up to $14 today, but we were recommending buying it at 13, and once we did the recommendation too, Samuel, it actually went below that. You could have got it even cheaper. So that's one we're accumulating also too along the lines of TGD.
So look, you know, when we talk about this stuff, we don't talk about it necessarily to toot our own horn,
No.
although we're really good at this and we kind of have been doing really well since you guys started watching the show. And if you're new, go back and watch the shows and watch what we've done over the inception. Be like, oh, wow, they called that and they did this. They called that. And then the next week it did this. And then I think you get the idea. So we give you these picks. We talk about these picks, right? And either you're taking action on them, you're doing it yourself, you're calling us saying, I want to become a client, please help, right? Or you're sitting there saying, I don't believe you could do 5% in a week, 57% in a week, whatever it is. Just take action. Just do something. So let's talk about ADHD, the stock ADHD.
ADHD is the pharma we've been talking about for quite a while now. We're rolling into earnings on the 30th, and that's what we're kind of banking on here right now. Why we're still sitting in the stock. It's up about 15%. We also have some $6 option calls on it. We'd like to capitalize on that earnings report. We're expecting a good earnings report. They make a drug for it treats ADHD, so you know the symbol's kind of obvious. But
sorry, what?
It's yeah.
What do you say?
But it's you know, we really like. It's another one. We really like the company. We're expecting good earnings out of it, and we're expecting a good future. We did buy some September calls for it, like I said. We bought those when we first started talking about it a few weeks back, but we also own the stock, and that's because we want to keep it for a little core hold. You know, it's a company we really like.
Yes, it is. So, and that's up about how much?
15%.
So that's up another 14 or 15% since our last show. So if you're paying attention, that's 8% in carb, another 14% in ADHD in a week. So these are returns that people sometimes expect or hope to achieve in 52 weeks, in a year, in 365 days, and we're banging out in a week. What is your portfolio doing? Look, if you haven't done so yet, take action. Get a dang review. Yeah. Let's do this. This is serious. This is your money, and this is your time. You're here for a reason. I believe in windows of opportunity, man. I do. And so there's a reason why you're watching this show. There's a reason why you've been watching us. If this is your first time, there's a reason. I'm going to tell you, there's a reason. If you've been watching all of our shows, right, there's an even bigger reason. So there's no coincidence. Take action. Let's get you going. In fact, we had one new client that has been waiting on his paperwork from his brokerage for, I think, 3 weeks now. Yeah. And he's been watching the show, and he's going crazy. He's like, oh, man, what do you mean up another 13% in that and up another, I think it was 100 and some odd percent in this other. So he's like, man, can't we start already? So don't be like him, right? Get your stuff together, get in, become a client is my suggestion. And see what happens. Watch what happens. Okay, let's talk about two more. Let's talk about H-band. We did options in H-band. We called it in the previous show.
Huntington Bank, those are up about 15% right now. That's another one. That's a small regional bank that we like, along the lines of the Bank of America pick that we've been giving you. Huntington Bank, you know, we'll talk a little bit about the Fed and stuff, but an interest rate hike is looking more and more like a reality. If you went to sleep yesterday thinking that there was going to be no September hike like a lot of people did, you woke up this morning and you kind of got a surprise because guess what? The September hike is back on the table. Really, Janet Yellen, she talked about a stronger economy. She talked about full employment. And then another Fed partner came out and said afterwards that really all they're looking for is a good unemployment report on the next cycle.
Yeah.
and they're gonna pull the trigger. So it looks inevitable that they're gonna pull the trigger. We just had a GDP raise. A lot of good things are happening for the economy. I know there's a lot of naysayers out there. I know there's a lot of doom and gloom out there. But really, you want to look at things realistically. We want to look at things, what's actually happening, not what people think is going to happen. Oh, it's gone too high, so it's got to come down.
And remember too, so Pat brought up a really good point. You brought up a really good point, and that is that even with these doom and gloom people out there, that's affecting like gold, like our gold plays right now. We're shorting gold.
Yeah.
Right. So when the market is going downhill, you can still make money. You got to learn how to capitalize on a down market, and not even a down market, down sectors.
Yeah, and it's, you want to take advantage of opportunity, and there's a lot of opportunity out there right now. But it's like when we were talking about, you had asked me about, there was an article about the collapse of the dollar and the economic,
right.
And what did I tell you? I told you, Samuel, maybe they're right, but guess what? It's not going to happen today. And we are playing the market today. So that's how we want to keep it. We want to keep very realistic, very, very frugal.
So wrap that H-band. What were we on the option play? How much were we up on that one?
About 15%, yeah.
About 15% in since our last show, or is that 2 weeks?
Since our last show. I mean, I'd have to check. It's up even more than that from...
So another 15%.
Yeah.
And now I saved the best for last because this one is so sexy and it is so yummy and delicious that, like, imagine that you're really hungry and you have a choice of going and getting a quick little hamburger that's been sitting under that heat lamp for a while, or right next door is the smorgasbord all-you-can-eat buffet on special for like $5.99. And you can just get all you can eat. This is that for us, right? Let's talk about the BAC options that we talked about just last show.
Bank of America. We've been telling you for about 6 to 8 weeks now about Bank of America. When we first started talking about Bank of America, nobody would touch Bank of America. We said buy it. We bought January options. We bought the stock. And just yesterday and day before yesterday, we started buying some September calls. And we're up pretty good on it, 153%.
Pretty good. Now remember, Pat is the unemotional guy. So let me interject for all you normal humans out there that don't have alien blood running through you. 153%. No. 200. No, we're up.
Right? Oh, that's right. We just checked before the show. We're up 202%. My apologies.
So we will fix the screen by the time you see this, but I think it's up 202% in under a week. Yeah. So this is exciting. I mean, look, we talked about our losses earlier. Cool. But look, if we have 5% loss, which is unrealized, or 12% loss unrealized, means we haven't sold it, we haven't lost anything yet, but we have a 202% gain in under a week. Do you see how this can start doing this?
Well, the Bank of America plays actually 3 layers. The 202% gain right now is the January calls. The actual stock that we bought is up about, I think it was, 30%. And then the options we bought yesterday are already up about 40%. So
we like that. And when you become a client, which you should do right this second, there's going to be our number here, how to get started. Actually, it's going to go to get your portfolio review is the first step to becoming a client. So do that now. Yeah. That's what I'm talking about. Go do that now. And you can start maybe having returns like this. I don't know. We'll see what happens when you become a client. Stop sitting on the fence. Let's do it. So BAC options up 202%. Let's do this, Pat. Look, we tooted our horn long enough. We're going to fill up on some drinks, get freshened up, and I want to talk about a couple other things with you while I still have you in the studio.
Yes, sir.
We will be right back after this quick message. Okay, welcome back. Samuel Levitz here, and now we are going to talk about what matters most to all of our watchers, all of our listeners on the podcast, all of our people on YouTube and Facebook out there in Make Me Money land, and that is realized gains and losses. We call them blended, right? Let's talk about that because this is important to them. So let's talk, what did we cash in this week for our clients? and ourselves, our own portfolios. I mean, in fact, let's start coming down here and go up, shall we?
Okay.
Save the best for last.
Yeah, let's start with what turned out to be not too good of a play. That was, we cashed in some of the Atosa. Depending on the portfolio and the focus of the portfolio. You know, some people have a longer term want, and some people they want gains right now. So we trimmed some of the Atosa at a loss of 12%. So that was our loss. We cashed in some aging Huntington Bank shares that the stock didn't move quick enough. So we lost about 38% on some FHN. Which is the other bank that we were talking about. We actually cashed that out at about 38%. You know, this is an important thing to understand with your portfolio. You see, we cashed out some of that Atosa and we cashed out that FHN. We cashed out one at 12% and we cashed out the other one at a 38% loss. We want to manage our money properly. So there's always going to be losses. So we cashed those out at a little loss, but we can move on to what we want with.
You know, that's a brilliant point that I hope you're paying attention to. And that is, if you, or maybe you have an investment team that's currently helping you or an advisor, it's one thing to not only have a team that picks amazing stock plays all the time. It's another thing to really understand when it's time to get out. Like we had a client during the last show that didn't know when to get out of his play.
Right.
And that could be a big problem. So
right.
You need an experienced team that really knows when enough is enough to leverage that money and repurpose it into something that's going to grow in a bigger way for you.
And even our guest later, Greg, can tell you, you know, when we were first starting to work his portfolio, we took some losses. You know, we took some losses. So there's always losses. It's all about money management. You know, your losses should be small, your wins should be big.
Yep. Oh, and that's a good point too. By the way, when you first come aboard with your review, the first thing we do when we dig in and see what you've got, we make suggestions on how to what we call cut out the cancer. So if you've got a bunch of stocks, maybe like Greg had, or Tom the other week, or or Peggy a couple weeks before that. You know, a lot of people that have stuff just have dogs in their account and need to understand, you know, this is the whole reason we do this call with you guys, the review. By the way, get your review. Text the word review to 760-254-0003. That's the whole point. Let us look at what you got, see what you've got, to see where we could stop the bleeding and start that upward momentum like we're doing every single week here. Pay attention. Pay attention. Let's talk about QQQ and make them smile, shall we?
Yeah, we shorted the Qs in the middle of the week, and we picked up about 68% on that.
Say that again?
68%.
68%.
So even if you add the FHN and the Atos together, is not even a quarter of the loss.
Right, it puts us in the positive, double-digit positive for the week.
We well more than made up with it, and that was a one-day play.
Yeah.
That was we bought one day and sold the next.
Yep.
Yeah.
Now the sexiest realized gain of this week was
GDX.
GDX. What is GDX, by the way? Tell them.
GDX is the gold miners. It's an ETF and it covers all your miners. You hear a lot of talk about stocks like VGZ, Nugget, things like that for gold. This is a basket of all your miners. So. You know, there's a lot of touting. In the beginning of the week, we saw kind of a trend going where, you know, people are so desensitized to the Fed raising rates that they just assume that it's not going to happen. So there's a lot of buying going in the miners. We saw a lot of recommendations to buy miners.
Oh boy.
And we saw it as an opportunity. We went short on it, and we ended up with 153% in one day.
Now let's talk about that real quick. In fact, the 2 points I want to talk about. Number one is, so we still subscribe to the. If you're paying attention to the show, please remember that for years I followed a financial guru. And you know, nothing against him. I'm a grown man. I'm responsible for my money. I get it. But I lost a crap ton of money, like well over 60% of my entire portfolio in a matter of, I think, 3 years. Just gone. Yeah. The reason was he didn't pay attention to a lot of these indicators, like not no personal attention on when to sell, how much to buy based on my portfolio. I mean, it was tragic, and I blame myself because I was uneducated. And quite honestly, that's why Patrick and I started this company. How can we empower the average investor to win like Wall Street? That's the entire point. That's the reason you're here watching. So we still pay attention to this guy's portfolio and his picks, and it just blows our mind what he's telling people to get into. And every week that these letters come out from this guy, it says buy more of this. It's down again, buy more. So he's saying when we're saying let's short the miners.
An endless funnel of money.
Yeah, it's like, well, where do you expect us to get this money if we've been buying it since it's been sliding down for a month now, and we've made several 100% on the downslide while he's telling people to buy it long, which is crazy.
Well, you can be very proud, Samuel, because you took a very expensive lesson and you turned it into a very lucrative lesson.
Don't do that. Learn from my mistakes, right? That's why we built the team here at Financial Reboot. In fact, the team that Pat has assembled here for the investment strategy team is second to none. I mean, just look at the returns we've been generating week after week after week after week. It ain't no joke, folks. So pay attention. So we talked about the realized gains, the realized losses, and look, this is the result. Last week's total realized blended average, we were up 57% for the week. That's cashed in, like money in the pocket. House money. I always talk about house money. So 57% is really cool. Let's do this. Let's take a quick break. I want to talk about Yellen during the next break.
Okay.
Is that cool? Because it matters. This stuff matters to you. Let's take a quick break. Watch this quick commercial break. We're going to fill up on drinks. We'll see you in 12 seconds. Okay, so this is the segment of the show where we like to kind of give you guys a little freebie if you're paying attention, and some of you actually are. Actually, some of our listeners and watchers and viewers, they actually play the plays that we are doing in our own portfolios, and it's really cool because they'll, where's my phone? They'll message in and say, Samuel, thank you so much. Patrick, thank you so much. I was up 12% on that. We love that. So pay attention to our picks when we tell you what we are doing. We're not telling you to do them, right? We can't, but we can tell you, hey, this is what we're investing in.
What we're doing.
This is why we're doing it. And then guess what? We come back the next week and say, hey, we're up 14%. We were up another 18% here. We're up 8%. We were up another 153% for the week. So I think you guys get it by now, right? So let's talk about, there was big news with the Fed and Yellen. Tell them about the Yellen speech.
Well, she gave her speech from Jackson Hole, Wyoming this morning. And basically, she caught people a little bit off guard. When she gave her speech, gold was up maybe about 18, 20 points. But she came out hawkish. And what really put the nail in this was after she gave her speech, and one of the other Fed chairmen came out and said that basically they're waiting for one good employment report and then they're going to hike. So yesterday, September was off the table. Today, September is potentially back on the table, but December is looking like a big reality. This is important. This is fueling the bank run that we've been riding, and it's going to be a little detrimental to gold. So, going into next week, Samuel, we're very bullish on banks still. There's a lot of good buys in there. We still even like Bank of America. I mean, at some point that thing's going to go back to $35, $40.
Did you catch that?
Yeah.
Pat, did it really sly? Bank of America. We're heavy in Bank of America right now.
We like Bank of America. And on top of everything else, it's a dividend-paying stock.
There's a reason we like Bank of America, guys, because in the week, for us, it's up 202%. We like that. Yeah. Pay attention. Pay attention.
Now, with these big gains, you always protect your gains with stop losses. Just let me throw that caveat out there. And right now, we're short gold. We still like gold in a long-term bull market, and it's probably going to make another run towards that 1400, 1450 area, but not right now. It's going to struggle a little bit, and we'd like to see a retrace back to about 1250 on gold. So we are short GLD right now.
GLD.
Which is the Spider Gold ETF.
It's an ETF. Well, tell me really quick what an ETF means. A lot of people don't understand the difference between
an electronically traded fund, and what it is generally it's a basket of stocks that cover that sector. So like XLF would be the financial sector. That's got your bank, you know, some of their better bank stocks, some of your better financial.
But
stocks.
how does an ETF grow versus a regular stock? Like when something moves, when a regular stock moves, the ETF moves.
Right, and
accordingly.
It's a joint effort by the stocks within that basket. So obviously, if bank stocks and all the financial stocks start making a move upwards, it'll pull XLF with it. So generally ETFs, the whole idea of ETFs when they first started coming out with these vehicles was that you could play a whole sector without having to buy 50 stocks. You know, so if you think there's going to be a big interest rate hike and financials are going to benefit from it, you buy XLF. You know, and there's a biotech ETF. There's one for every sector. There's a retail ETF that you can trade, and that's what they're built for. They're built for the smaller investor, so that you can play a sector without having to buy 40, 50 stocks. And
awesome.
Basically, they do it for you.
Yep. So hopefully that helps.
Yeah.
And you paid attention to the picks that we gave, because a lot of you have called in and say, what was that pick? You know, you text us that your questions are, what pick was that you guys just posted out? So we're going to put them on the screen. Make sure you have them. You probably saw it already, so don't sweat it. And as always, if you have any questions, you know how to do it. Text the word SHOW to 254-0003. We will answer your questions on air or in our Facebook group. You'll see the Facebook group link here on the screen as well, because look, that's Facebook. It's all about Facebook. I mean, there's several billion people on Facebook now, right? And you guys are on Facebook.
We own the stock.
Yeah, exactly. Exactly. Or if you're, you know, how much time do people spend on Facebook? It's ridiculous. The point is this: we can get our message over, answer questions real quick on Facebook, which is great.
Yes, sir.
We put our shows live on Facebook every week, which is great for you. So let's take a quick break, and we're going to get right into the next segment right after this. Would you like a team of financial investment experts to consult with you on your financial portfolio and your investment goals for free? We'd be happy to personally review and consult on your investment goals based on your current portfolio. Now, we do this by listening to you, yes, listening to you and your needs, finding out what your goals are, cash flow, long-term stability, whatever it might be. And then we design you a custom investment plan for you specifically to get you there in the fastest possible time. And all this is accomplished with our extensive 45 years of cumulative investment experience inside the stock market. And then we give you an exact custom blueprint showing you the exact steps that we would take if that was our portfolio. Now, I know many of you are asking, why are you giving away such a valuable free portfolio review for free? And it's simple. I know that a certain percentage of people we do this for will want to use our expertise to help them on a regular basis and become a client. Instead of trying to convince you to work with us, we prefer to help you in advance for free and let the value of that experience do the selling for us. And once you get your consultation, one of the three things is going to happen. First possibility is you're going to hate it. You're going to have the consultation, you're going to feel like we provided no value and we wasted your time. Now, this literally has never happened, but in the event that you feel we wasted your time, we will gladly send you $100 as compensation for the time that we spent together. Sound fair? Cool. The second possibility is that you might decide to implement our suggestions to repair and grow your portfolio yourself. If that's the case, we wish you luck and the best of opportunities to you and be happy that we have helped you. Now, the third and most common scenario is that you're so thrilled and excited from our consultation that you ask us to assist you in growing your portfolio every step of the way. And now, in the event that that's your decision, here's how that works. We take you through what we call our 3-step cleansing process and then our 5-step portfolio acceleration plan, where we literally consult you on every aspect of your portfolio day in and day out with our team of experts. Nothing is outsourced. All the work and research is done here in-house by our professional investment analysts. That means that we craft your investment goals personally. We review your current holdings for profitability and risk exposure personally. We research the best picks based on your investment goals. Goals that are particular to you and your situation. Literally, everything is done for you. We provide personal video updates based on your account holdings that you get regularly, all done by our in-house senior investment strategists personally. Now, if that's the path you decide to go down, you might be wondering about the cost. So if that's where you want to go, let me tell you how that works, because it's always something that you want to pay attention to when you're finding out services like that. And if we're a good fit, which I'm 100% positive that we can help you, if that's the case, our service only starts at 3%, but that's only if we make you a guaranteed 6%. So it's basically like you're playing with house money. And so yeah, that's awesome. And so what we're gonna do is we're gonna meet on a conference call. We can share screen if need be. During that meeting, we're gonna ask questions so we get to understand you and your situation, and start creating the portfolio of your dreams. Now, to do this, we're gonna be in real time with you present so you can really create something transformational in your finances. And when the meeting is over, we will email you further research on what we found, an exact blueprint to achieve your financial goals. So you can use it as you see fit. And from there, you can either use the blueprint, go off and manage your own portfolio yourself with your newfound expertise, or if you like, we can discuss having you on as a client on a monthly basis to make sure that you are moving forward in your financial goals. And of course, in the unprecedented event that you think we wasted your time, we'll give you $100 as compensation for wasting your time. So literally, you've got nothing to lose and everything to gain by getting this portfolio review for free. Now, just like these happy and profitable customers that you see below. With that in mind, click the link below to get started right now. But there's a catch, and it's a big one. Before we go any further, you need to know that we just can't and won't work with just anyone. In order for us to do this free work for you, you need to meet some strict but very reasonable criteria. Now, first of all, this is not for people who want to micromanage our investment experts or complain if a pick takes a wrong turn on occasion, which some will, let's be honest. I mean, they do their job extremely well, arguably some of the best available on the planet. You'll need to be willing to bring a minimum portfolio size of $250,000. And thirdly, you must be a nice person and easy to work with. I mean, our clients are more like family and partners rather than just clients. We need to like and trust each other, right? So if you meet these three, it's simple rules, and you want us to personally create your free portfolio review blueprint, here's what you need to do next. Click the link below, and once you're on that link, you'll be taken to a simple questionnaire. It's very simple. It takes about 45 seconds to complete, and just gives us a basic foundation on your finances, what you're looking to accomplish. Then we use this information to prepare in advance, right, for our call. Once we have that information, you'll be able to select a time from our calendar that best fits your schedule so we can have our discussion. And that's it. We'd be delighted to help you for free. And if you get value and decide that we provided you some great value and you want to become a client, that's great. Welcome aboard. So are you ready to get started? Click the link below and let's get you started now. Okay, welcome back. This is my favorite part of the show because this is where we have a special guest, usually Skyping in from somewhere around the world, one of our clients, but this time we've got someone in the studio. Mr. Greg Vegas, one of our new clients. Gregory, hello.
How are you?
Man, so Greg has a really cool story. I'm going to get into that in just a second. But Greg, tell them a little bit about yourself and why you decided to become a client of Financial Reboot. Just say hi to everybody.
Yeah, hey everybody, it's Greg Vegas, and I actually don't live anywhere now. I just travel all the time, so I can't really tell you where I'm from because I'm typically on a plane.
Yeah, rub it in, man. Rub it in.
So yeah, just an internet entrepreneur, and really got into one of those positions where, you know, you make some money, but you really don't know what to do with it, right? And like the definition of insanity was literally me. I was trying to, you know, learn different things of how to like invest my money and stuff, and I kept on losing it. Like every time it was like lose, and I was like, this is crazy. And then I ran into, and then we've, you know, Samuel and I have known each other for quite a while. And, you know, he told me what he was doing, so I was like, hey, I'm going to try this out. And I had a very, very interesting flight to Hawaii, actually, if you want to tell them what happened.
Yeah, well, let's see. How do we want to talk about this? So first, let's start with this. Gregory, you don't have much experience in the stock market, no. First of all, right? No. Okay, so he doesn't have any real experience in the stock market. Greg makes good money. He's an entrepreneur. He's had several businesses, and the challenge is, which many of you probably is, you know, what do you do with that money? I mean, a lot of business owners probably plug it right back into their company, thinking that's the best way to do it. When really, it's a good idea to diversify. We talked about diversification and how to like grow money on the side, so you have several different income legs like growing for you simultaneously. But in particular, Gregory he invested in an online stock trading program.
Right.
Can you just kind of mention that real quick and why you decided to do that and how that turned out for you?
I mean, I was in a situation where, you're losing money, and not just losing money, you don't know what to do with it, right? And again, the definition of insanity is doing the same thing over and over again and expecting things to change. And like, if you've got money sitting around, either it's going to sit there and be stagnant, or you're going to lose it. And that's what I was doing. I was losing it. So I got this stock trading program, and I tried to learn it, and it was the most stressful thing I have
It created
ever.
a full-time job, right?
I was like waking up at 6:30 in the morning, which is not my thing. I was like, I would literally get on the computer like 6:29, like thinking I'm like on Wall Street or something. Like one eyeball's like open, and then they're like saying buy this, buy that, and I don't even know what I'm doing. Right? They're like short. I'm like, what the hell is a short? Right?
Dude, you got the whole studio laughing because I think everyone in the studio.
I don't know what this stuff is, and I click the wrong thing and do this, and all of a sudden I see like the real-time thing, and it's just negative, and the numbers 300, 400, 500, like 1,000. I'm like, and then I start sweating. I'm like, this is crazy, man. And then there was one time I was like up, and you know how if you're not educated on something, you're not gonna know what to do, right? And like everybody's like locking your gains and stuff like that. I didn't even know what that meant. Like I was like, what do you guys mean? And I took a shower once. Right?
He took a shower once.
That's why they take so long, because it's an annual shower.
If you come to visit us here at Financial Reboot, please shower.
Yeah.
Please shower. You showered today?
I hope I did. I can't remember.
Man, you guys.
But I took a shower, and I was so naive, and that's what happens when it's not anybody's fault. But if you're not educated in something, like these guys, they're pros. They say it takes 10,000 hours to become a professional, and 10,000 hours to master that skill. So I'm not a master of that skill, but that shower, I lost $40,000.
Expensive shower, man.
I came out, and I looked at the account. I hit refresh, and it was like down 40 grand. So I knew I had to do something, and that's why I thought I'd give you guys a shot, and it's been unbelievable so far.
Yeah, man. Well, I remember when Gregor and I first spoke about he was doing this. He was asking me what I thought about the stock trading stuff. I was like, man, there's some good programs out there. And truthfully,
right.
The problem is you're creating literally you're creating a full-time job for yourself, which you quickly found out. Right. And if that's your goal, then that's great. I mean, our concierge service here is much different. We'll get into that here in a second. But tell them about what happened. Like you travel the world, obviously, and you decided to stop off in Honolulu. Why?
Right.
Let's tell them about that. It's kind of this is a really cool story, actually. So.
Yeah, I mean, I was in California, and I'm like, I've never been to Hawaii, and it's like halfway to Asia, so I'm like, I'm gonna stop in and see what's going on here. So I board the plane in California, and that was a really early flight. Like it reminded me of like waking up for the market. It was
so you know, a really early flight was at like 9 a.m.
It was 9 a.m. It was bad, man. And the TSA pre-line was closed.
Hey, look, that Patrick and our entire investment team is up at like 2:30 in the morning.
Yeah,
for you.
That's not my thing.
Man,
like the other day, this guy. I get here, okay, I woke up at like 6 a.m. to get that 9 a.m. flight, because that's how it is. And I get here, and this guy's like, oh, by the way, we're waking up at 5 a.m. to climb some mountain, right? He takes me to this mountain, and it was like the scariest thing I ever saw. But the flight made up for it, because here's what happened on the flight. You get on this plane, right? And it was a really, really old plane. I'm like, okay, fine. I'm sitting in the plane, and I land in Hawaii. The plane was so old, it didn't have Wi-Fi, so I couldn't check anything. But I land, and I open up the Scottrade thing, and it's up like, I don't know the exact number. It was like $9,000 or $10,000. And so I open my iPhone. I close the app because I'm like, something's wrong with it.
Yeah, reboot it.
Yeah. I reboot it. I go back.
Financially reboot that app.
And here's what happened. It was the funniest thing ever. It went from like 9,000 to 10,000. And I'm like, this is insane. And I'm calling him. He's not picking up. And he's like, I got to show you something. And I'm like, bro, I already know what's happening. So it was like literally a 5.5 hour flight. I don't know the exact number. It was like $9,000 or $10,000, and I didn't, have to learn the skills, right? And that's the master to me of outsourcing. One of the most important things as an entrepreneur is outsourcing, right? And not having to learn that skill, but find somebody who learned it, and that's what I've been able to do, and that's one of the smartest things you can do in anything you want to do. So that's exactly why I found you. And I know what you guys have done, so that's why I did that, and that's one of the best flights I've taken. So
Yeah,
I think
man.
I want to take more flights.
The lesson here is keep flying.
Yeah.
Like you should leave Honolulu today
Yeah.
and just go out around a short trip and come back, and by noon you'll be up at another couple grand in the account, and just keep doing that.
Per flight. That's
Yeah,
good, right?
why not, man? So the point is this, man. Look, we're good at what we do. I mean, this is the whole reason why we started Financial Reboot, is for clients just like Gregory that have cash sitting around that maybe have tanked their accounts over the years, like mine was tanked, and are stressing out, like not knowing what to do. Like someone please help. Like help. I mean, look, the bulk of our clients, we've got multi-million-dollar clients, we've got just beginning clients, and we got the whole spectrum. And it's kind of a typical situation where people are like, I don't know what to do.
Right.
Like, I just need help. Like, I see they've been watching, like you've been watching our show for a while now, I guess, huh? And how were you believing some of the returns that we've been getting? I mean, what was your thought when you were saying you were seeing some of these returns that we've been getting week after week? Did you believe it? Did you not believe it?
Yeah, you mean watching the show or looking at my account?
No, watching our shows.
Yeah, I mean, you guys are talking about these gains, and then what I would do is I would actually, I would go put that stock ticker in that you guys would talk about, and I'd look at it, and I don't know much about it, but all I know it was up. I would look at the chart and it's up. So, after I saw that, I was like, the more I wait, right, the more I procrastinate and wait, the more I'm going to lose, or I'm not going to gain, right? You don't gain anything in life by just sitting. Like one of my mentors told me, he said the worst, what was it? A stagnant mind is the world's most dangerous playground, right? So if you stay stagnant, nothing's going to happen. So you may as well do something and gain something. And I have a really high tolerance level. So I'm like, look, let's just grow this thing. And that's what it was, man. I wanted to do that. And I saw you guys consistently over and over again. And I'm like, this is stupid. If I sit here, nothing's going to happen. Yeah. So I may as well do something. Yeah.
And the point here, too, is that, look, I hope you guys realize that when you become a client like Gregory, we're not, the stuffy corporate types. I mean, I'm not shaving. Granted, I'm wearing some nice clothes today that I got at Salvation Army probably, or maybe I borrowed it from you.
Right.
And the point is this. The point is that making money, and especially making money in your portfolio, should be fun. So, Gregory's family now. All of our clients, they're like family, and there's a reason why. Because, when you look at accounts from our consulting, you look to see what's done, you've got a big smile on your face.
Right.
And typically when that happens in your account, you tend to like the people that are helping you through that. So we've got a great relationship with all of our clients. We want you to do the same thing. I think I'll do a shameless plug right now. What the hell? Here on the screen, you'll see a way to become a client. Actually, the first step is to even test us out. Is just to text the word review to 760-2. In fact, that's what you did. You texted in, I believe. Yeah. Text the word review to 760-254-0003. What's going to happen, like we did with Gregory, we're going to have a call. We're going to have a conference call that we record for posterity for you, where we get the entire investment team and we see exactly what you're currently invested in. We talk about your investment goals. We show you what we would do if that was our account. I just give you suggestions on what we might do and how we could take that account from where it is to where you want it to go in a relatively short period of time. It's an invaluable call, and I believe, are we still doing it free? We
Absolutely.
are. Okay, so yay, we're still doing it free. Oh. Not long. I mean, we charge $497 for that. And $197, but we're going to charge $497 coming up here soon after the next couple of clients. So get that free review now. Greg, you had a couple questions off air, like behind the scenes. Right. Did you want to ask me now so we can let people know?
I mean, the only real question that I had was when to, take a profit for your own personal profit, like transfer it to your own bank account to spend it or do something.
Well, the monies are in your accounts now. I mean,
right.
So just so you know how we work here is that all your funds stay in your brokerage accounts. Like we consult. We don't do trades for you. We show you what we are investing in, and we show you what some good ideas are based on your right. Let's make that little disclaimer for our attorneys out there. But the question is when to pay yourself.
Right.
Okay, so if you remember during our call, like during that review call when we said text the word review or go to our website and get that review, we ask Gregory and we ask all of our clients and potential clients, like, what's most important to you? Like,
Right.
Like Gregory, he has high risk tolerance. So he's like, I want to take this account and, turn it into big multi-million. Like, that's, Greg is like,
Right.
he wants big things. So we adjust our strategy with the investment team based on each individual client's needs. So
Right.
if you want to take money out, like say Gregory wants to take a trip, he's got a big trip planned to, around the world in 80 days type of thing. He just lets us know. You basically let us know, and we say, okay, well, look, we can carve off 25 grand here and still play with house money and leverage that house money into to more than make up for that 25 grand in in the coming weeks, no sweat. So, yeah, a lot of people have that question actually. When do I and what should I do? It really depends on your goals. You just keep in communique with us, and we do that. Now, the other side of that coin is what you had an issue with. I remember when you first came aboard. You had a big issue with not knowing when to take profits.
Right.
And Patrick and I have talked about this in past shows, and this is really crucial. I mean, when you were doing that system,
right.
How did that go? I mean, you were mentioning that shower segment.
Yeah, it was really stressful.
Yeah.
Like, my heart would start racing, and it'd be like, all we're taught is like literally, buy a stock, invest in it, and it'll go up forever, right? And it's not like what I've learned is like from what I learned in that thing is the market is very volatile, right? And all things are different. I mean, I learned some stuff there, but for me, it was more of like, I'm going to get a heart attack doing this, because it was just like, it would go up, and then I'm like, yes. And I'd literally walk like down the hall and be like, yeah, I'm from Wall Street. I'm like, all these movies
I'm a big cheese. I'm
like cool like that. And I'd go back to the computer and I'd like stand up, be like, we're set. And I bought this big iPad with a stand to watch like the tickers, and it'd be like negative. I'd be like, okay, swallow. So it was just not for me. And again, waking up in the morning was like not for me. And that's why I had to outsource, man. I mean, find people that know that skill, and hey, I got to take more flights, man.
Yeah, you do have to take more flights. So that's a good skill that Gregory just mentioned, which I think a lot of people out there watching really struggle with, and that is really the temperament to being a successful investor. And we talk about it here in the studio and at the corporate office all the time, because when we have review calls with new clients, and this, Gregory, if you don't mind me sharing, this is exactly what happened with you, man.
Right.
And that is that, we get excited. People get excited when they see stock, making 5%, 10%, 20% in a week, and they're like, oh man, let's let it ride. And people start getting their calculators out, man.
Right.
Oh, like I put, we're up, and let's let it ride. It's so crucial to know when to take profits. And that's really, in my opinion, that's why our team at Financial Reboot is so strong, because we can help you temper that need for greed.
Right.
Some people have this need for greed, man. It's like, hey, if we made 10,000 today, we can make 50,000 by tomorrow. Yes, maybe. Or what we can do is we can be happy with a 20, 50, 100% gain. Take that money, leverage it into another thing. So at that point, it's like going to Vegas, right? No pun intended.
Right.
Right. Greg Vegas, get it?
Right.
It's like going to Vegas, taking the proceeds from that 5% gain, 20, 50, 100% gain that we just had in your account, and moving it into another security where we're playing with, I always call it playing with house money. You guys hear me say this week after week after week. We love to play with house money. And we're getting more questions in here. You're very popular, apparently.
Thank you.
Yeah, people are like, hey, tell Greg. But anyway, this is the point. It's like, you got to know when to sell. You got to know when to take your profits. Profits are good, right? You want to take those trips around the world, buy more fancy stuff, big cars, all this good stuff. Totally cool. And this is what we help you with. When to take those profits, how to leverage those profits into more profits. And so you build this step of success, really, which is the stock market. Closing thoughts, anything you want to tell the people out there? And
I mean, if you were in the situation I was in, or you've got money and you don't know what to do with it, I would definitely, you guys are doing a review for free. It doesn't hurt. And, again, the definition of insanity is doing the same thing over and over again and expecting things to change. If your money hasn't grown last month or the month before, if you don't change what you're doing right now, nothing is going to change next month. So, I would just do the review. It's free. What do you have to lose?
Yep. Let's hope it's still free by the time they're watching the show.
Yeah.
look, I'm going to take full advantage of Gregory visiting us here at the studio, and especially making that big, huge gain, getting off the dang plane. I'm going to make him take us out, the entire staff, to Mai Tais.
I knew that was coming.
Yeah. We're going to go for Mai Tais, baby. Come on.
Yeah.
The studio likes that. So we're going to shoot the rest of the show.
Right.
Get ready. Grab your wallet because we're going to get treated to Mai Tais. And we're going to be right back after the segment. Gregory, thank you, man. Great to see you. Come visit us here at the studio and become a client. We'll see you soon. As always, thank you for all of your messages. They were great messages. Guys, what a great show this week. I mean, you heard from Greg and what happened in his account and why he came out here to Hawaii. We love stuff like that. So anytime we have great clients want to come to Hawaii, you know where we're at. Come visit. We'll shoot the breeze, do the Hawaii thing. That's kind of nice. We'll celebrate over a Mai Tai about all your earnings, just like we did with Gregory. I mean, come on, this is what it's about. Let's get your portfolio rocking and rolling in the right way. If you haven't asked for your free review yet, guess what? Here it is. Get your free review. What you're going to do is text the word review on your cell phone. Pull your cell phones out, people. Come on, let's go. Text the word review to 760-254-0003. You'll see the number right here on screen. I want to say it's a $97 or $197 value, and we're still doing it for free, I believe, Patrick. I think we are. We're going to be doing that for free. For a limited time, we're still doing that. So get that review. What it is, it's a 20-minute call with our team. We go into your portfolio, what it looks like, what your goals are, and then myself and the team kind of help you go through exactly what's right for you based on your goals, like where you want to go with your account, with your funds, with your income. And quite honestly, it's invaluable. As you heard from Greg, I mean, it turned his situation around, just like it will do for you. Text the word review to 760-254-0003. How about that speech from Yellen, right? We nailed that one yet again. Our team's good, I'm telling you, our team's good. If you're not paying attention, pay attention. Come on. We talked about gold. We talked about a couple other plays. And we even talked about some of our losses because we're transparent like that. But more importantly, we talked about our blended return, which is really what you want to focus on. Like, it's great to talk about the wins. It's not okay to not talk about your losses as you go through having some losses. You want to look at what they call the blended return like we talked about, which is really, really important. And we talked about CARB. We talked about all kinds of good stuff. I think we even had some good information about what the week ahead is going to look like. So guys, as always, you guys are awesome. Keep doing what you're doing. Take action. Get that review. Be a client. Why not? What the heck? What do you got to lose? Let's do big things, right? And as we always say here, and again, thank you for texting all your questions into the show. We love you guys. Connect with us on Facebook, right? If you guys haven't connected with us on Facebook, you'll see the link right here. Connect on Facebook. We answer a lot of questions. We post a lot of the videos. You know, sometimes we do video answers to questions you come in with. The investment team will research, like we did with the first Hawaiian bank play. We had a great question in from him a week or two ago. It was just great. So sometimes we'll reply with videos that really help you guys take a step in your investing career. So look, do something, and do something now. That's my call to action for you. In the meantime, as we always say here at Financial Reboot, make a difference. We'll see you next week.